All right, what up, man? Profit Gang, you already know what it is. Welcome to a very, very brand new year. I just want to say Happy New Year to each and every one of you guys that's going to be watching this video. Um, 2024 was a good year, and 2025, is going to be a better year. All right, so I don't want this video to be very, very long. Just like you can see on my screen right now, I just want to do a trade breakdown very, very quick, just to show you guys that nothing has really changed about the way we're going to be looking at the market even in this new year of 2025. All right, if you look at the charts right now, you can see that the way I mark up my charts hasn't really changed. We just crossed into 2025 somewhere around here. All right. So the chart markup have not really changed. The trading plan remains the same, the system remains the same, and everything pretty much remains the same. Although you can start to refine some of these concepts to very, very low time frames, and you can get crazy entries on very, very low time frames. All right. So you can refine the strategy, but the strategy in it of itself is still the same. Okay. And I'm going to walk you guys through this sell on Euro USD right now. All right. So in order to understand what's going on here, let's go back to the higher time frames. All right. Let's go to the daily time frame. All right. The trend is your friend, but we want to see the trend on a higher time frame. Now, I'm not going to do a detailed external view of the macro perspective like I always like to do. This is a very, very simple trade. It's a very, very simple trend. So I don't want to go into the macro view of the market. All right. I just want you guys to observe this trend right here, right now. Bearish market, obviously. The market found its low somewhere around here. Okay. The market found its low somewhere around here. It trended back up for a while. It found its high around here. And for the fact that we are in a bearish market, of course, we're expecting the market to move from this area here all the way down to hit the take profits around this area here. You can see I had my take profits around that area there. It was already marked out. Now that take profit is from the higher time frame, meaning that even when we go on the lower time frames, that's the price point that we are looking for the market to reach overall. All right. So from the higher time frame, we understand the fact that we are in a bearish market. All right. So moving to the 4-hour time frame, of course, if you understand market structure, the way I teach it, the structure on the higher time frame is the more so external structure, depending on the trend that you're looking at. Then when you start going to the lower time frames, you start seeing what we consider to be internal structure. All right. So the daily time frame is already bearish. You can see this low here. All right. You can see this is a low here. And of course, you can see even on the 4-hour time frame, we have the market doing something like low, high, low here, low there, high there, something like this. From here, there's a breakout structure all the way down to here, okay, which made this area to that area. And I'm going to explain why the market didn't get to that area. All right. So the market never got to this area. The market reacted from the breaker. If you are new here, please, you want to maybe see previous videos. If you understand exactly what I'm saying based on the fact that you've been following for a while, then of course, if you know, you know. All right. So talking about the breaker level, the market is all about possibilities and probabilities. Now, when the market is trending, once it breaks this low becomes a level of support that was broken and is now resistance. So the market can definitely come back to that resistance and continue to the downside from there. All right. Now, a lot of people would say this, grab that liquidity and then move to the downside. Is also possible. It's also a possibility that this market can just continue from the relevant order block from here without even going to grab that liquidity. So don't try and force the market to grab any liquidity. Just follow the principles of market structure. It's that simple. All right. So with that understanding, we know that the market is now trending to the downside. We have had this low. We have had this high. The market reacted from this breaker level and we were now forming a trend. So there was this low, there was this high, and then there was this low again. Now looking at the market from here, the market was reacting from breaker levels, breaker levels, breaker levels. So in this particular case, I was like, you know what? I'm done trying to sell the market from order blocks because it seems like the market is expanding to the downside with so much volatility that is not going back to those order blocks to sell from those other blocks before it goes to the downside. So let's try the breaker level here. So that's why I marked that level there as a breaker level. Like I said, this is going to be a very, very short trade breakdown. All right. And to be honest with you guys, let me just confess. All right. I did a longer video, but then I lost the file. All right. So this one is going to be a shorter video. It's less detailed, but hopefully you'll be seeing a lot more from me on YouTube. All right. So I'm going to be dropping videos like this back to back, back to back. All right. So anyways, we are now following this particular trend on the 4-hour time frame. And the trend I'm talking about here is this high to this right here. As soon as I saw this, first of all, is I understand the fact that from the higher time frame, we still haven't gotten to this level of take profit on the higher time frame. So I know there's a definite possibility that the market wants to clear those lows. Okay, so that is still a target. Now, again, this level is now forming support. Okay, equal lows support. All right, so this level is now becoming a support level whereby you have one touch of the support level, you have two touch of the support level. A lot of people would have been expecting a third touch of the support level to take a buy. All right, and even now, I mean, the support level has been broken. A lot of people are expecting the market to come back to that support level so they can take a sell. All right, but I don't want to get into all of that. Anyways, that was more reason why I was looking like, okay, I mean, it's very close to this. The market can definitely just react from the breaker and just sell to the downside. Now, if I know that the market should get to the breaker, how do I refine the breaker point? Because, of course, looking at the breaker right now, the breaker seems to be just in the middle of a fair value gap there. And again, I do not trade from fair value gaps. All of my trades are coming from a particular order block. All right, all of my trades are going to be coming from an order block, and that's the reason why this trade here for me was a mistrade. Okay, you can see that the market just reacted from a fair value gap. Now, the market definitely grabbed liquidity, it definitely changed character, and there was a very, very amazing sell trade from here. But hey, I just didn't catch that trade. Now, knowing the fact that the market is now breaking this demand, okay, forming a support and heading to the higher time frame, take profit, I was like, nah, I have to get in on this one on the breaker level. Now, from the 4-hour time frame to the 1-hour time frame, you can see the breaker level there is the same on the 1-hour time frame. Okay, so 4-hour breaker is now in alignment with 1-hour breaker. 2 time frames are now basically in agreement of the fact that we should be looking for a sell from that area. But again, on the 1-hour time frame, I can't see a relevant order block. All right, on the 1-hour time frame, I cannot see a relevant order block. I don't want to make this too messy. Let me remove this. Now, I still want to refine this area. Again, the market is fractal in nature, meaning that structure is structure on every given time frame. Now, I know that there is some structure here because I can see the wick of this particular candle. And this is why you need to understand candlestick anatomy. Okay, sometimes looking at a candlestick on a higher time frame, you know exactly what must have happened on the lower time frame from just the wick of that candlestick on a higher time frame, because you understand how candlesticks are formed. All right, this candlestick right here is a bearish candle. Okay, it's a bearish candle. But looking at the candle right now, I can tell you where the candle opened, and after the open, the candle bought. Okay, so at first, maybe the first 15 minutes of the candle, maybe the first 5 minutes, doesn't really matter. But I can tell you from the open of this candle, it bought before it now later sold and closed at the bottom here. So you might not be able to see what information is there on the 1-hour time frame. So we have to refine this further to the 15 minutes time frame or the 30 minutes time frame, whatever the case may be, until you see a relevant order block that agrees with you that there is, of course, internal structure around that area that is aligned with the external breaker. Now, again, if you don't know what I'm talking about as a newbie, then of course you need to maybe watch the previous videos that I have on the channel, or maybe you want to join my community. You can find me on Telegram at Glorious Profit Station, or I'm going to put the link to my Telegram channel in the description of this video. All right, you can learn everything from scratch because I have a free course that can get you started just to understand the rudimentary things about the market and things of that nature. Okay, so let's refine this furthermore to the 30 minutes time frame. So going to the 30 minutes time frame, we want to look at market structure around this area, and of course you can now find your order block around this area. Very, very simple concept. Now, as soon as you find your order block around that area, your order block now becomes your stop loss. Or if you have like a fixed stop loss that you use, maybe 30 pip stop loss is your fixed stop loss. Trust me, this is still a good trade. Using 30 pip stop loss, you're still going to get a 1:4.8 risk to reward trade. Okay, this is like a more higher time frame target, but like even if you're targeting a 1:3, let's say your aim for this trade is a 1:3. That's a 1:3 trade right there with 30 pips stop loss, meaning that this dropped 90 pips. All right. Now, if your stop loss is about 20 pips, let's say 20 pips stop loss is the maximum you use, you're still in on this trade. All right. But your stop loss here is super tight. You might want to just open it up a bit to maybe 25 pips. 25 pips stop loss. Just open it up a bit, and that's still giving you a 1:3.6 risk to reward trade. Very, very simple trade, very, very easy trade. And yeah, I just wanted to show you guys that don't be in a hurry to change your strategy. Okay, don't be in a hurry to change your strategy. You can add refinements to your strategy, and that's very, very okay. But a strategy that has worked for you for the whole of 2024, I don't think you should be in a hurry to change that strategy in 2025. All right. You can see from my breakdown that I'm still looking at the market in the exact same way And I'm still going to be looking at the market in the exact same way for the whole of 2025. To be honest with you, I have no plans of changing the way I look at the market, because let me just show you guys something. Let's go to the weekly time frame, for example. All right, let's go to the weekly time frame. Let's go all the way back to, a time where smart money concept was not even as popular. All right. This is like 2000 and it's like 2003, 2004 area thereabouts. I mean, look at this. This is market structure, guys. This is market structure. Let's look at this area here. Okay, on the weekly time frame. Remember we said price is fractal, or the market is fractal. Now let's look at this area here. Now what you would observe about this area is the fact that this here is a high. This here is a high. This here is a low, and then there was a massive break of structure to the upside. I think this is the highest point it got to. All right. Now, once structure breaks like this, you're going to have an order block here, which is one area that price can get to. And again, you're going to have a breaker level. Okay, breaker level and order block. Now here, this is 2004, guys. You can see how the strategy was working in 2004. Smart money was not very, very popular then. In fact, I don't think there's any trader that was talking about smart money concept at this point in time. Now, for me, I don't believe this is like smart money concept. I believe this is just purely market structure. Market structure is the very nature of price action. Market structure is like the blueprint of the market. Okay, the markets will always move structurally, always. I mean, look at this. So at this point in time, it reacted from the breaker, give you an amazing trade. Then he later came back to the order block area. I mean, I did not make this up. All right, I did not make this up. So you can see that even before when smart money concept was popularized, these strategies have been working. Okay, now we are in 2025 and this strategy is still working. Here I'm looking on the weekly time frame. The market can definitely get to this area here on the weekly time frame. So there could be a very nice reaction from this area. Now, I'm not saying the market is going to, fall to this area here and then buy all the way back up to take out this structure. Even if, according to the law of market structure, that's what should happen. This is like a whole push that can bring about this and this. All right. I'm not saying this is exactly what's going to happen, but if we can have even a reaction when the market gets to a weekly order block, this is a weekly order block. Now, please don't ask me the reason why I mark that out as the weekly order block. It's just based on my understanding and based on my experience. All right. So this is my weekly order block. The market can come into this area here and give a reaction. Now, if the market should react like this on the weekly time frame, let's see how many pips that will be. From this area here, okay, from somewhere around there, hold down shift, this, hold down shift, right click and drag. That's about 355 pips. Okay, so if you're entering this with, let's say, a 10 pip stop loss or a 15 pip stop loss or a 20 pip stop loss, you know what the risk to reward of that is going to be. That's only a reaction from the weekly level. All right. So again, like I said, I don't want to make the video a very, very long video. I just wanted to show you guys, I just wanted to prove to you guys that you don't really have to change your strategy just because, we've gotten into a new year. You're now like, okay, new year, let's try a new strategy. Try and stick to the strategy for a longer period of time. And of course, I promise you, man, you're going to see the results. All right. So this is going to be the end of the video for this particular video. And again, like I said, if you learn anything from this video, if you have any, questions, leave them in the comment section. If you learned anything from this video, like the video, subscribe to the channel, and of course, expect more of this type of videos coming from me, man. So I'm going to call it a day from here. Up until the next time I see you guys, man, from the streets to Wall Street, man. Let's get it.